Hey, this is Matt from InvestiQuant. Today is Wednesday, June 9th, 2021. This morning we saw the markets open slightly higher and they have consolidated almost the entire session here. Not much action taking place today. We're consolidating underneath the open but above the prior session closing price here in the S&P following yesterday's volatility. So we do have inside days forming here in the S&P. We also have an inside day in the NASDAQ and in the Dow. The Russell is really the only one that does not have an inside day. But what we're going to be looking at this afternoon is what has happened historically when you have a bearish outside day like we had yesterday, followed by an inside day that is forming into the close and trading below the open like we currently are. So let me go ahead and set this up. I have selected all four instruments. The time-based entry is set to 3 p.m. Eastern time. Next, I'm going to say that we are trading below the open at the time of entries, and by coming to the post-open filters and selecting the close is below the open, that'll add that piece of information. The next piece of information that I want to add is the inside day aspect of the study. So to do that, I'm going to say that the intraday high is not greater than the prior high. So I'm going to hit minus there. And then I'm going to scroll down to the intraday low and say that the intraday low is not less than the prior day low. That creates our inside day that is currently trading below the open. Next, I'm going to go into the price patterns library and say that yesterday was a bearish outside day. I'm just going to grab that from the active today section. I'm going to click on the candlestick pattern day after bearish outside day. That is available here in the candlesticks category. And then lastly, I'm going to put it in a similar market environment. We are in a strong market environment above a 10, above a 200-day simple moving average. Now I can click view results. And here we go. These are the results based upon entering the market long at 3 p.m. Eastern Time, exiting at the close 4:15 p.m. Eastern Time, when the prior session was a bearish outside day and it's being followed up by an inside day that is trading below the opening print at 3 p.m. This is taking place in a bull market environment, which is above a 10 and above a 200-day simple moving average. This pattern's pretty rare here, so we're only looking at 16 samples for the S&P, and this is dating back to 2003, so we do not see this happen often. It has happened a handful of times in the past year or so, but it does not happen very regularly. The NASDAQ only has 10 samples, the Dow 5, and the Russell 9, so very low sample sizes here across the board. If we look at the win rates on them, you will see they are all a little bit skewed towards the upside. You do see some stronger win rates on some of these. Keep in mind the win rates are strong, but the samples are light on those, so it is a little bit easier to get, a 70% win rate on a small sample size. But they are all favored. S&P coming in at 63%, NASDAQ 70, Dow 60, and Russell 67. So I don't like to put too much weight into a study that only has, say, 9 samples here, or 16 samples really isn't all that much. But if you look at it as a whole, you can see they all kind of have the same agreement taking place. So regardless of if it's 63 or 70, same ballpark, which has been favored historically on the win rates here. Now, if we look at the average win and average loss, looks like for the S&P, the average win is larger than the average loss, and that is true for all 4 of them. The NASDAQ has larger average wins, as does the Dow and the Russell. So historically speaking, this pattern has not happened very often, but when it has, the bulls have done a little bit better into the close when entering at 3 p.m. and exiting at the close of regular trading hours. So hopefully you found that helpful. Good luck today. We'll see you next time.